Hey everyone, welcome. It is April 1st, half an hour before the market's going to open. Hope you all had a wonderful weekend and a holiday. If not if, today is the first day of the month. It's the first day of a quarter. And we also had a short week last week. So we should expect that today when we open up, we will start to get some more activity. So we'll get more volume, more volatility. Senior traders are going to be back on the desk. Yeah, last week we just went flat. We did get a little bit of movement, but on the week we were just flat. We came down, we bounced back up, we flirted with all-time highs. A lot of the week we had low volume. We did get a little bit more volume towards the end of the week, but overall it was a pretty muted and sideways trading week. So usually when we get near these all-time highs, we start pulling back a little bit. However, on Friday, a whole bunch of economic data came out and the market didn't get a chance to react to it because the market was closed. So today's price action, especially at the open, we may see a lot of jostling around, rebalancing of portfolios because of anything that might have been read into the data. Now, unfortunately, I don't think I can go back. Yeah, I can't go back and see all that data that came out. Oh, we could use a different news system, but I'm gonna have to pull it up. And so I won't do that right now. Maybe I'll do that in the afternoon video. So I can't go back and see what that data was right now, but we can kind of look at the futures and see how the market is reacting to that. Before I do that, let's take a look at how many stocks hit those 90-day highs. I'm pretty sure it was around 476. So we were at 443. Oh, we went down to 431. And that was a different number when we closed on Thursday for sure, because for sure on Thursday, this number looked like it was higher. So I guess when we closed on Thursday, we hadn't had the complete updated data yet. So it did kind of come down a little. 400 is still too much. So we are going to expect that to pull back. And these two upcoming weeks are two of the strongest seasonally excuse me, in the year. So we're not going to expect it to pull back too far. And the S&P 500 may be back down to that EMA 8. Before we were saying that because of the distance from the EMA 8, that pullback might come all the way down to the EMA 20. That's still possible, but for now, because of the strong seasonality, we won't be too surprised if we just hit the EMA 8 as well. So that's a little bit slightly different than what we were talking about on Thursday. Over the weekend, I had a chance to look at more data, more things. So now EMA 8, EMA 20, either one, I would give them equal chance of being bounced off of given a pullback. So let's take a look at those futures, see how we're reacting to the news over the weekend and what we had on Friday. Over here, futures, is this updated? Oh, this still probably updated because we did get very close to those all-time highs on Friday. Yeah, so all green is going to be difficult to discern which sectors and which stocks are the strongest. But let's look at our futures. Okay, mostly random. 10-ish basis points on the S&P, completely flat on the Dow, and about 20 basis points on the NASDAQ. So we are slightly up, but in a random amount. So we're not going to read too much into that. So a lot is going to depend on senior traders coming back to the desk today or this morning and how they're going to start positioning themselves. The morning session is still a lot of retail. So those senior traders, they're probably going to take the day to figure out exactly how they're going to position themselves and then start trading in the afternoon. So we might see a pickup in volume and pickup in volatility in that last hour. Then the morning, we'll see, looks like it's going to be pretty muted because that's mostly the retail guys. So the futures aren't really giving us a lot to work with this morning. So before we look a little bit further at the indices, let's take a look at our dollar. dollar continues to move up. So it's looking like the dollar is pretty strong at this point. We were looking at this breakout of this downtrend that we had. That's a kind of a shorter term view. So if I zoom back now and I look at this, if this was my low, then what I have is a higher high. This high right here is higher than this peak right here. A higher low, this low is higher than that one. And then I am approaching this high right here. So if this keeps on moving up, I'll have a higher high again. And it looks like this dollar will have gone from a kind of choppy period, although with quite a bit of a range. It looks like we'll at least maybe try to challenge these highs up here. So we are looking like in a shorter term, in a few month, maybe quarterly basis, that we are going to go into a upward movement in the dollar. It might put a little bit of pressure on stocks. However, if there's a lot of demand for dollars, and there is in that demand in dollars is driven by demand in assets like US stocks, then it won't really affect the stock market too much. So if we look at TLT, TLT came up and came very close to touching that purple line. Yes, didn't quite touch it. We are in this channel, and we were commenting last week that after touching this channel, it was likely that we were going to come back and test this horizontal line, if not the lower end of this channel right here. The more likely level is this horizontal line right here. And you can see in the pre-market, we moved quite a bit. So the bond market is moving quite a bit, whereas the stock markets look completely flat. If the stock market starts taking its cue from the bond market, then that is going to be downward pressure on the day for the major indices, which would be okay because in the S&P 500, we are looking for that small pullback to the EMA 8 or the EMA 20. And then one day will be over. Our seasonality for the week the effect of the seasonality for the week will be over, and we can continue to rise the rest of the week. And the seasonality for the next 2 weeks, which are two of the strongest weeks of the entire year, then that can kick back in and maybe we'll break out of this and make new highs. So let's take a look. Before I look at the other major indices, we'll look at an intraday basis and see how we look over here. So opening up flat from where we closed on Thursday, and this tiny little peak just a little bit above where we opened on or closed on Thursday is the all-time high right there. So I can add a line right there. That should just make it purple. And maybe get rid of this one since they're pretty similar. So I'll get rid of this one. And we'll just see if we bounce around over here or if we can break out. If we break out, then that's great news for, well, obviously it'll be another all-time high. But if we make another all-time high, then again, when we look at our 90-day breakouts, this is going to pop right back up very close to 500 again, and we are going to expect that pullback. So no matter what, we can't string too many all-time highs in a row. So it is going to have to pull back to that EMA 8 at some point, just like on this one, went to all-time high, pull back to EMA 8, pop right back up. Maybe it actually barely made another all-time high right here. So maybe it has a little bit more to go. So the two all-time highs are not too similar, and then it can come back to the EMA 8 and then continue moving upwards. So in the next couple days, maybe today, maybe tomorrow, we will expect this to, at the very least, come back to the EMA 8. Everything that we're seeing still supports that. On the QQQ, we are not quite as strong. Our all-time highs look like they're probably up here around 449. And it's going to be important if the SPY keeps making all-time highs and the QQQ is doing this, that means that the QQQ is no longer being led by tech. And that's a significant rotation of sectors over the last almost year and a half or a year and a quarter, because we were being led by tech, we were being led by semiconductors, AI, the supposed AI revolution. And if the QQQ isn't leading, that means things like the Dow Jones are leading. So we can see this is probably an all-time high right here in Dow Jones. We'll look at that in just a moment. And blue chippy stock sectors. And blue chip sectors tend to lead during recessions, not during periods of growth. So that would not be a great signal, and it would the ability for the S&P to keep on moving upwards on a longer term basis would be limited. So let's take a quick look at our other indices on a day-to-day basis. Yeah, you can see the QQQ just keeps continuing chop sideways in this box. Although it is at the upper end of that box, which is good news. It just needs to bounce off of this EMA 8, which has been touching for the last week. All last week, it just came back and kept on touching this EMA 8. So it's more of a consolidation pattern, but maybe now that senior traders are back, maybe after the economic data on Friday, we have some confidence and it can move upwards. We'll just have to see how this week really plays out. Maybe today or next couple days, it could break out of this box, but really we would give it the week to see if it can break out of this box or if it's going to pull back, challenge that EMA 20 or that MA 50 right here. So that MA 50 is now inside of our box. So it's not out of the question for it to come and test that MA 50 now. If I look at the Dow Jones, we challenged the all-time highs just like the S&P 500. So that's looking very much like the S&P 500. And we are definitely, the Dow Jones, the more blue chip stocks are leading the market at the moment. Let's look at our small caps real fast. Small caps, definitely not all-time highs, but matching recent highs, maybe popping a little bit above recent highs, and is looking strong this morning. Let's go back to our futures, and we don't have it on here. Okay, never mind. So at least in the pre-market, it's looking like we are going to challenge these highs up that we saw on Thursday. So if small caps can start leading, it would be a little bit strange because Dow Jones are leading in the overall market. So small caps wouldn't be leading, they'd be catching up actually. Yeah, because we're not at all-time highs. So small caps play catch up while the Dow Jones is still leading. Then we start to see some interest in the tech stocks again, and that starts leading above the Dow Jones. Then we've got alignment, and that can be a bull market. That's not going to be an immediate thing though. That would be something that develops over a few months. So we'll just watch this, sit and watch and see if this starts to pull back like it did every other time it was breaking out, this high, this high, this high. But the lows are getting higher. So this is developing a trend. And so we'll see, even if we get a pullback, how deeply do we pull back into this peak region? This is really looking like it's getting stronger. So if we look at this objectively, we should start to really pay attention to small cap stocks. And overall, this is starting to develop a trend and move higher. So we wouldn't want to be too short the IWM for too long. Let's take a look at our VIX. Probably not going to give us too much information because the last week was quite muted. So we'll want to see if this VIX spikes up. It probably isn't. If we're talking about a pullback in the SPY back to the EMA 8 or even to the EMA 20, that shouldn't represent too much. That should be a pretty normal movement. So I wouldn't expect market makers to get too jittery. We may pop up over here to this 14.5 to 15 region, which, in the last few months is kind of normal. It's not that, I mean, we've been going up in that big uptrend for over a year now. So this would be normal range. That would just represent a normal pullback. If we start getting to the 16, 17, 18, 19 region, then we're going to start getting serious about potentially having a larger pullback closer to the 5% back down to this MA50, and then if we break that, then to the MA200. So far, we're not really going to expect that, at least not quite yet, though. In the very short term, we wouldn't expect us to start breaking below that EMA 20. So I wouldn't expect that necessarily this week or maybe even next week, just because of how strong seasonality is these 2 weeks. Over 60 years of history, these 2 weeks being either the number 1 strongest 2 weeks or the number 2 strongest 2 weeks of the year. So even if we buck that and we go down over the next 2 weeks, we wouldn't expect it to really go down significantly. So a pullback to the EMA 20 at most is what we're expecting over this 2-week period. Let's take a quick look at our sectors, and then we'll break off and prepare for the market open. Okay, so again, we're near the all-time highs, so it's hard to see the separation, but we can still rank our sectors, and we should be able to see that the Dow Jones or the blue chips type of sectors are leading, at least in the shorter term, in this kind of long 1 year or half a year term, not necessarily. But on the longer term, it's looking like we've got semiconductors, home builders, retail, financials, communications, and tech. So this is looking pretty good on a longer term basis. QQQ right here, XLI probably doesn't belong way up here. And same with aerospace, we expect it to be more middle of the road. And I know if you visually look where I'm circling, that doesn't look like it's the middle. It looks like it's in the bottom third, but all the SMH, the XLC, XLK should probably be collapsed into a single sector. If we're only looking at the 10 major sectors, XRT and XLY should be collapsed together, so they shouldn't be so far apart like this. So if I collapse the ones that go in XHB should be part of XLRE, which I can't find right now, down here. So if I collapse all of those, then XLI is not in the middle. It should be, yeah, this is more like the middle right here, not up here. So XLB, B and I, if I remove all these indices, are technically next to each other. VRE, EPU. So there's only a couple of sectors that are off here. The one that's glaring me in the face is this XRT, XLY. But UP down here, E probably shouldn't be way down here as well. Should be probably more over here, IV, but overall not too bad. It's looking pretty good. So on a longer term basis for us to keep on moving up, it's actually looking like there's not too much resistance in terms of sectors at the moment. If I look on a shorter term basis, let's look at 1 month basis. E, U, B. So yeah, the more conservative, lower to medium risk sectors are leading IF. Yeah, and then we've got our tech, our consumer discretionary way down here. So they are on a short-term basis falling out of favor. Let's take a quick look at the SMH. SMH is still holding on and doing okay. We had this significant bar right here with the significant volume, significant price action on this day, and we haven't been able to recover since then. We did pull back to the EMA 20. Now we've been just hanging out at the EMA 8. So the next couple of weeks are going to be very important for tech QQQ because we will need to see this break out of this high right here in order for us to have continued confidence in a strong market with growth leading the market and continued upside momentum. So maybe if this can't break out of that, then we will expect a pullback, a larger pullback in the overall markets, and then try again. So we're going to, if we come up and match this high and fail, that's a double top, and that has a pretty good chance of indicating a downward movement, at least a stronger pullback. So back to the MA50 or MA90, maybe even the MA200. So SMH, it needs to see some strength. And we had that big NVIDIA conference, and it didn't help. It wasn't able to pull the semiconductor space up all that much. So overall, we're going to say there's a little bit more probability that we're not going to be able to make it above these all-time highs right here, but we'll wait and see because seasonality is strong. And if money goes into growth sectors, it should go back into the semiconductors. If it stays in the blue chippy stocks, then this is probably going to pull back. Yeah. All right, so today we're going to watch carefully. Probably the most important thing that we're looking at least at the beginning of this week, is the seasonality. So maybe a bit of a pullback to the EMA 8 or EMA 20, but we're not going to expect it to go lower than that, and probably a recovery. If it's going to be a strong week, then we are going to make an all-time high. Otherwise, it'll just be another choppy sideways week, and that's maybe not the best for the S&P, but if it chops sideways long enough, then we can get strength back into the S&P 500. So this is going to be another kind of, we still have to be very good stock pickers right now, because we can't get a really good indication of which sectors and which indices are going to lead, because everything was all green over here. Way too green, way too much green over here. And we are flirting with all-time highs. So it's going to be very critical for, if we're going to perform well in this short-term period, to be able to pick our stocks very, very well, because you can't just ride this index higher. What we're seeing is that there's mild movement in the index. There's a lot of choppy movement. There's mild upward movement, and that upward movement could represent very, very slow growth in equity, or break even or slightly down movement in options because of time decay. So choosing your options, choosing your expirations, choosing your stocks or the underlying equity or the options is going to be critical if you're looking at single options trades and being able to continue to make money in this short term, in the next 2 to 3 week period. So we're going to pull out all the stops and do our best and just show off our stock picking skills over the next couple of weeks. Just evaluate very carefully. If you are not confident in your stock picking skills, then just go in baby steps. Just prove to yourself that you can pick. And if you're proving to yourself that you can't pick, then don't go into single options positions. Try some spreads, try some more neutral action strategies instead of a single option, like a straight call or a straight put. So we're about 5 minutes away from the open, so we'll end it right here. Have a wonderful day, and I will see you guys in the aftermarket session.